One question that I get a lot from you guys is, should I invest in ASB/EPF or stocks? Obviously, there are pros and cons to both of these options, but let's start with the historical performance. Over the last 10 years, 10,000 ringgit into global stocks would have turned into 31,000 ringgit, whereas the same 10,000 ringgit into ASB or EPF will only become 18,000 ringgit. So the returns that stocks gave is nearly double what the returns that the safe stuff did. So it seems like a very straightforward answer, right? Just put all of your money into stocks, that is the answer, case closed, right? Well, that's not what I'm doing. What I'm actually doing is I'm going more towards ASB/EPF than stocks, and there's a reason for this. I'll explain it later on in this video. I have massive FOMO right now, especially over the last 1-2 years, because the stock market has just been ripping up, but it is what it is. It's what I need to do according to my financial situation, and I can't derail from that just because one is performing better than the other. Anyway, by the end of this video, you guys should understand more the differences between these two investments, how you can use your own financial situation to determine, your allocation between safe investments, aka ASB and EPF, and riskier investments, which are stocks. By the way, this isn't a ASB/EPF is better than stocks, which one should I choose, which one is better? The answer is actually both. Let me explain. So most people ask, ASB or EPF or stocks, and the answer is most of the times it's not an either or thing. It is you should invest in both of these assets because they have very, very different sort of setups and they give us very different return profiles. So you can use both. So the question is more, how do I allocate correctly to these different asset classes? Think of ASB and EPF as your floor. This is your safe investment. It doesn't drop. You can sleep well at night knowing that you're not going to wake up tomorrow and lose all your money. On the other hand, stocks is your growth engine. It will move up and down, but over the long run, it has delivered a higher return. One is like a seatbelt to keep you safe. The other one is like a turbo engine to sort of bring you forward quicker. You kind of need both, I guess. And it's not like a situation where we say, should I get an engine or a seatbelt? You need both. They just serve different purposes. So now, let me first talk about our safe layer. And I'm not going to pretend that it's bad because both ASB and EPF are actually really, really good products for us to invest in. As Malaysians, we should really be thankful that we have this as an option because in many other countries, the only option that they have is to invest into things like fixed deposits or money market funds, which will give us, 3%, compared to what these guys are giving us, which is 5 to 6% every single year, risk-free. Think about it, right? ASB, for example, is fixed in price, meaning you invest 1 ringgit, at the worst, you will get to withdraw 1 ringgit. It will never drop in price because it is a fixed value investment. So for the financial year 2025, they paid out a total dividend of 5.75 cents, aka 5.75%. 5.2% is what they call their normal dividend, and then they gave a 0.55% bonus dividend. I don't really know what the difference is, but yeah, this is what they gave. Basically, the total dividend that you got is 5.75%. Again, for a risk-free investment, it is exceptional. I mean, you can just compare this to, for example, a 12-month fixed deposit rate, right? Which right now, banks are giving us around 2.3%. That is actually the benchmark for ASB, so you can see they're giving way higher than what fixed deposits are giving us. So think of ASB as something that is liquid, it is ringgit denominated, and there's no capital risk. This is, I would say almost as good as it gets for a safe asset. And then we talk about EPF, who has been doing really, really well recently. So last year they gave 6.15% dividends for both the conventional and Sharia compliant option. Now the benefit of EPF is that it forces us into saving, every single month before our salary even hits our bank account. They already deduct this amount and send it over to EPF. And it's not just us, our employer gives us money as well. Without EPF, I would say a lot of Malaysians would have a much tougher time when it comes to retirement. But the thing about EPF you have to know, if you guys want to voluntarily invest at least, is that it is locked until retirement age, right? You can't just withdraw this money at any time you want, which you can do with ASB, you can do with stocks. So this is not a savings account, this is truly a retirement account. For me, I left corporate about 3 years ago, actually. Time flies, and ever since then I have not made any contributions towards EPF because I just don't think that personally it's worth it to me. It could be for a lot of you guys. I know many people love EPF. It's just that for my current situation right now, I would rather not. Between ASB and EPF, I actually prefer ASB, even though over the last few years ASB has slightly underperformed EPF, I would say. And the only reason I prefer ASB is that the liquidity, the flexibility it gives me to withdraw my money at any time I want it is just worth way more than the small difference in percentage that EPF gives. Anyway, these two products are what we consider the floor. It's boring, it's safe, it will deliver us expected consistent returns, really nothing to complain about. We should have at least some money here. And then we talk about the growth layer, which is stocks. And this is where I want to mention to you guys that, going all in to just safe investments is not enough, because like I said at the start of this video, stocks have massively overperformed any asset class out there over the last I don't know how many years. So again, going back to the example, if we invested 10,000 ringgit 10 years ago, stocks would have given us 31,000 ringgit, whereas ASB and EPF would have given us just 18,000 ringgit. So you can see there is really a big gap in performance between stocks and ASB/EPF, and this is considering that we only invested 10,000 ringgit one lump sum. If we invested more money, if we continuously invested every single month, the difference would be much larger. But one thing that I want to say is that over the last 10 years, the stock market, especially the US, has truly been on a bull run, which I don't think is sustainable long term. So I know I said it gave us 12% per year over the last 10 years. I would say more realistically, stocks will give us maybe 8%. If it's really, really good, I would say maybe 10% per year on average, but still, it will outperform ASB, judging by, the last 60, 70 years of the stock market. There's no guarantees about this. We could lose money moving forward, but all we have to base this on right now is historical performance, so we'll use that. And even in this last 10 years, which is a good period, a fantastic period for stocks, there were still big dips. In 2022, for example, the global stock market dropped by 18%, and then in 2018, it dropped by 9%. This is the global stock market. If you look just at the US stock market, it's actually a lot bigger. Their drops were, I think, 20, maybe even 30%. And if you look at 2008, it dropped by 40% in a single year, which is huge. And then going one step back, in the 2000 dot-com bubble, the Nasdaq 100 dropped by 80%. So that is a huge, huge amount of volatility that you have to be able to stomach and go through if you wanted to invest in stocks. But in my opinion, at least, it is worth it. Honestly, I know an 80% drop is scary. In theory, I'm telling myself, right, if we saw an 80% drop, I would be completely fine. I would just invest more money. Wow, what a perfect opportunity to buy the dip. But in reality, when this comes, I would definitely have some doubts, right? Looking at the stock market drop 80%. If you invested 1 million ringgit, you would have been down 800,000 ringgit. That is just the truth. That's just a reality that I want you guys to know. If you compare this to ASB and EPF, there are no down years, absolutely zero. Every single year, 2000, 2008, 2018, 2022, no matter what happens, they still delivered us dividends and the value of our investments still did not drop. This is the safer aspect. This is what we are getting in return of lower returns potentially. By the way, real quick, if any of you guys want to invest into Malaysian or US stocks, then check out Mumu. They are the broker that I'm using right now. They're regulated by Securities Commission Malaysia. It's a very easy to use platform. So yeah, check out the link in my description. If you sign up using my link and deposit some money, you will get some nice freebies from Mumu. Okay, so now having said all of that, I think a lot of people will be thinking, maybe the safe option is better, right? It's smooth, it's predictable, I can't lose money. But there are still some risks when it comes to taking the safe investment. Number one, playing it safe would mean that you will not be beating inflation by as much as you want. Yes, 6% returns are good, but if inflation is 3%, if medical bills are rising by more than that, then your purchasing power would not increase by that much. And this is with 6% returns. If returns drop to 5%, let's say 4.5%, then you'll be really on the borderline of returns versus inflation. Still, it is better, to get 5%, 6% rather than nothing if you didn't invest your money at all. So don't take this as me telling you guys that it's not worth investing because you can't even beat inflation. It is still better to invest than to not. And then the second thing about these safe investments, especially for those of you guys who don't have access to ASB or if your ASB is maxed out, is that with EPF, like I mentioned, it is locked until retirement. So yes, you are getting the nice juicy dividends every single year, but if you really, really, really need that cash, you can't have it. Now when we flip to the other side, stocks can only give us higher returns if we're able to hold through the volatility and not panic sell. For example, if in 2008 stocks dropped 40% and you panic sold, your returns would be terrible. You might as well just invest in ASB, you would have done way better, right? Even in 2022, when the stock market didn't drop as much as in 2008 or 2000, a lot of people were panicking, including myself, But thankfully, it didn't force me into selling any position. So the real thing that you need to consider between these two is that even though, yes, I say you guys need to also invest in stocks, otherwise you'd be giving up on potentially higher returns, you also need to consider the fact that you need to be able to stomach these drawdowns. You need to be able to hold through the pain, otherwise it will just not work out. Now, let me talk about how I split my investments. Right now, I'm doing 60% in ASB/EPF, 40% into stocks, and then a small amount into crypto. Now, a lot of people will be thinking, for someone my age, right? Especially for someone who is so well versed into finance and investing, why are you being so conservative? Why do you have 60% of your assets into ASB? Well, the thing is, I am self-employed. My income is not stable. It fluctuates month to month. Sometimes I will even make no money. So I have to play it a bit safe when it comes to my investments because I can't take risks everywhere, right? Some of you guys might know that as a full-time job, I am a trader. So there I already take on a lot of risks. It just doesn't make sense for me to also take risks with my long-term investments. And the advice of taking on more risk because I'm young, it actually makes sense for most people, I would say. If you are someone who is, you have a stable job, you have a stable salary, you work for the government, everything is stable, then 100% if you're in your 20s, in your 30s, you should take on more risk, maybe do even 80% stocks, 20% ASB. It's just that in my situation, I need to make sure that I have this money or these investments into ASB and EPF because even though my plan is not to touch this money, at least I know if business is not going so well, I won't die, right? I can use this money. I don't want to be forced to sell my investments if I need the cash. And that's the thing that actually matters, right? Your floor, your safe investments should be the amount of money that you need to make sure that you are safe or that you feel safe, right? Like I said, if you have a higher risk job like me, if you're a freelancer, you're a business owner, then definitely have more assets into safe investments. If you have a very secure career, everything is fine and dandy, then you can take on more risk with your investments. Just balance it out depending on your current situation. But I don't want to tell you guys how you should split your investments based on my current split because like I said, there are many factors that made me decide to split my investment like this. So these are 4 questions that you can use to ask yourself to find out which one you should invest into more. Number 1, how stable is your income? Like I said, safe, stable income, go for it. Take risk with your investments, especially if you're young, invest into stocks, invest into crypto, whatever you want. If you're in a riskier career, then consider taking a safe route, consider making more in safe investments. So if things go bad, at least you won't die. You can still withdraw that money and use it for your day-to-day expenses. Number 2, your time horizon. If you're investing for the next 3 years, then stocks is going to be really difficult because it can fluctuate by a lot. If you're investing for the next 30, 40, 50 years, then stocks start to make a lot more sense. Number 3, do you even have a safety net yet? If you guys don't have an emergency fund, then yes, you can invest in stocks, I guess, but your number 1 priority should be to build that emergency fund, which you can always store into places like ASB. EPF, I guess, is not really an emergency fund because if an emergency comes, you can't take it out from EPF. So yeah, ASB, money market funds, they're a much better option. And then number 4, like I said, can you handle volatility? If the value of your portfolio drops by 20%, so 10,000 ringgit invested, tomorrow you wake up, it's down 2,000 ringgit. Can you handle that? If you cannot, then as much as I want to say, you must invest in stocks, stay away. Or invest a small enough amount that you're comfortable losing it and then slowly try to increase this as you get more and more comfortable. So there's really 2 camps when it comes to this. I've seen people in my comments say, you shouldn't invest into ASB, into fixed deposits at all because then you're giving up so much potential returns. Look at my stocks, bro, it's up 30%. Look at my Nvidia, I'm up 1000%. Invest all into stocks. And then on the other hand, there are people who say, don't invest into stocks, it's so risky, ASB and EPF gives us 6%, why do we want more than that? Slow and steady is the way to go, right? So yeah, there are these 2 kind of opinions out there and I would say both of them are wrong because at the end of the day, you should use a mixture of both. If you go all into ASB and EPF, maybe you'll be fine, but you will be giving up a lot in terms of potential returns. And if you decide to go all into stocks with no safe investments at all, then one mistake, one bad thing to happen to the market and you could lose all of it. So the answer, like I said, is not either or. You should not be picking, one to go all into. Use a mixture of both depending on your current situation, your job, your financial situation, how much money you have to invest, how long you have to invest. So let me know down in the comments below, what is your current split? And more importantly, do you think your split is the optimal way to do it based on your situation? Thanks for watching this video to the end, guys. Hope you guys enjoyed it. If you guys want to invest in stocks, don't forget to check out my link to sign up for Moomoo. You'll get some freebies when you guys sign up, and you'll support the channel as well. Like this video if you enjoyed it, and subscribe to my channel if you haven't already. See you guys in the next one. Peace out.